Ladies and gentlemen, welcome back to the channel for an end of the day wrap up on not only everything that happened today in the markets as well as with AMC, but what's going to happen tomorrow, the economic data that you need to know, as well as what could happen directly with AMC stock. The work's cut out for us here in this video. Hit that like button and subscribe to the channel if you have not already. But if you guys also want to take it a step further, come trade with me live in real time. Link down below in the description of this video. This market environment can be quite rewarding for some of those trades. Now, let's get into what has happened today. Number one, the biggest thing that has happened today is Apple. And Apple has really dragged down this whole market because their Mac shipments fall more than 40%, worse than their other rivals. But really, just to see an Apple number year over year to be down 40%, I mean, that just hasn't happened before, right? That's literally never happened to see iPhones or Macs or iPads or wearables like watches, and you've never seen that before. So it's creating a lot of fear in the markets, especially coming at a time where technology, your large tech technology, has really been in a bubble with, I just heard a figure today, these are the highest forward PE ratios that we have had for decades. That's a scary number, right? That's a scary statistic. And it's because technology is in a bubble. Now, in relation to AMC stock, AMC is up 7% on the day. Apple is down about 2%. We talked about this in the video earlier today, but the collateral crisis is worsening, meaning that when Apple and your large tech companies are down a lot, it creates a lot of bullish pressure on AMC, because when that collateral goes down, it's collateral that is used to fund these short positions and to remain in these short positions. So when it goes down, you have to see more collateral be added. You have to see more cash be added. You have to see shorts hedge out their short positions, or in the end, cover on those short positions. So Apple getting this kind of news today, not a good thing for those shorts. And when you couple this with the other information, there's a very compelling case here that if the markets do continue to fall, it's going to put a lot of upside pressure on AMC, even more so than what we're expecting. And I think a lot of what has happened with AMC recently is all based off of expectations, because we reported to you guys in the video earlier today that a lot of stocks are in the movie theater industry are hitting highs. Cinemark just reported that their attendance has hit a 3.5-year high on April 8th, whereas their stock is now almost at a 13-month all-time high. IMAX is approaching an 8-month all-time high. Marcus Theaters is also at about a 5-month high, whereas AMC stock is not even close to that. It's sitting at almost the lows that you have seen ever, right? Since the meme stock saga has actually started. And why this has been happening is the expectation that this reverse split is going to go through and the judge is going to okay this, and we're going to face a lot of dilution. AMC stock could fall 50% from here. And that is the running theory and the reason why hedge funds are short on AMC in such a dramatic fashion. Well, let me be the first to tell you it's not so clean cut, that there potentially could be a MOAS-like event coming after April 27th. And this is no hopium. This is no, spreading unrealistic expectations. None of that. This is based off of the market's current expectation that everything's going to be fine, that we're going to get dilution in a massive way. We're talking 80, 85, 90, 95% dilution from here. Whereas it usually doesn't pan out that way. And the judge has made many indications that it's not going to pan out this way. And I think at the very minimum, we get another court date. And markets are not prepared for that. Hedge funds are not prepared for that. So that's kind of what is happening today. Cinemark did get that news, and that is what is propping up movie theaters as well today, not just AMC. They're all having a pretty good day. So fundamentally speaking, pretty good day for your movie theaters. AMC stock up about 7%. About 16 minutes left of the trading day here today, so I don't expect things to move around all too much. But on a technical basis, AMC got rejected at that 50-day moving average. That is this purple line right here. That is at $5.36 per share. You broke above this twice and hit $5.37 per share twice today. So you broke out 1 penny higher than the 50-day moving average and got rejected. You're currently trading at $5.23. So you're at the higher end range. Now, if you start to break out above these moving averages, then your next level is going to be as high as $7.17 per share. And you have so much bearish positioning for April 27th that I think it's very well possible that AMC could break out to the 200-day moving average. Although if we do, then the sentiment at that point would have to be flipping to, think that, hey, maybe the courts don't just stamp this with approval on April 27th. So the higher AMC goes from here, the more uncertainty you're going to start to realize about this upcoming court date, April 27th. And my percentages are about 10% chance that the judge outright dismisses this and lets the reverse split happen without another court date, with nothing, right? About a 10% chance that's going to happen. So it doesn't look very likely. It looks much more likely you get another court date. Looks much more likely that AMC stock is going to rally after April 27th. And I think it's a beautiful time to be long on AMC. Now, on another note, what happened today as far as economic data? Well, we reported this in the video earlier today as well. Let's go ahead and go to it. So you had 1-year inflation expectations that massively ticked higher. You were expecting 4% 1-year inflation expectations, and this is consumer inflation expectations. It came in at 4.7%. Last month's reading was 4.2%. So a big increase across the board from the expectations of this reading, and last month's reading itself coming in at 4.7% was not good. And the actual categories here, it's interesting because basically everything went higher besides food. Food actually fell quite a bit from 9% to 5.9%. And then that's good, but rent went from 9.2% to 9.6%. Now, inflation expectations for the 3-year horizon increased to 2.8% from 2.7%, but declined 2.5% from 2.6%. So the 3-year inflation expectations also ticked up higher, but the 5-year inflation expectations ticked down a little lower. So you're getting kind of a mixed data point on the longer end curve of inflation. The 3-year inflation ticked down, 5-year inflation did go higher. And it's going to be interesting because markets typically look at things in a more short-term kind of outlook, but those 5-year inflation expectations tend to drive some of the algorithms. Now, coming here in about half an hour, you're going to get Fed Williams that also speaks at 4:15 p.m. And if he says something, it can move the markets. We're heading pretty close now to the May 3rd meeting, just a couple of weeks away. So anything these Fed speakers say will be important to the markets. Now, tomorrow, you're going to get a 3-year bond auction. The previous bond auction was 4.635%. So you want to watch that. That could give the markets a little bit of a move. And then you have Fed Kashkari at 7:30 p.m. tomorrow, but you really don't have anything throughout the trading day. So tomorrow is going to be a very docile day heading into Wednesday when you start to get the inflation rate and all of the other data, guys. So that is what we had here on the day. If we take a look at AMC stock on the Ortex data, cost of borrow rates, the short interest, all of that, give it a second here to load. And it's totally on Apple. All right, give it a second here. You're sitting at 25.14% short interest of free float, 130 million shares currently sold short, 874.7% cost to borrow average, cost to borrow max at 1,050%, and cost to borrow minimum at 368.29%. Interactive brokers still sitting at 390% cost to borrow rates with about 150,000 shares currently available to be lent out. And if we take a look at the overview here, the free flow out on loan is about 39%. You do have about $635.5 million worth of short positions currently in AMC stock, and about 39% of the free flow is out on loan. That means the difference from 25 to 39 is about 14%. So 14% of the float is out on loan, but has not currently been sold short. So what does that mean? Well, there's 14% of the free float that could go towards covering on some short positions, that could go to lending out stock, that could go to different various causes here. But long story short, there's dry powder on the sidelines. Now, something that I want to watch pretty closely heading into April 28th is the ratio from calls to puts. So the total open interest of puts for April 28th is 89.14%. Calls is 10.86%. You've seen this hit a high of about 11.2% earlier in the day today. It has come down slightly towards the end of the day, but you're up from 9.77% yesterday. So you're up about 1% total. And why I want to watch this is because if you start to see more calls populate the option chain and it doesn't, continue to be this 10-to-1 ratio or 9-to-1 ratio, basically for every 9 puts on the markets or on AMC for April 28th, there's one call. If you start to see that get more into a normal kind of range, it's going to tell you quite a bit about the certainty of this court date, April 27th, and can really help you gauge your trade a little bit better. Now, if we take a look at the option activity here on the day, 120 orders totaling about $26 million, positive order value of 11%. And if we take a look at the Stocko tracker data, give this a bit of a refresher. I don't know what it just did on me. Yeah, let me see. Yeah, I don't know why it's not breaking down the option chain for me. I hate when the Stocko tracker does this. But nonetheless, you're not looking at too much activity for this Friday. Some nominal numbers, but that can change at any given moment in time. If you start to get more options that populate the option chain, especially with only a couple days left to expiration, those weekly options, that can move the stock around quite a bit. And by the end of this week, you're probably going to see an influx of options across the board as we do get more clarity. Now, the markets are currently expecting for May 3rd a 75.8% chance of a 25 basis point rate hike, 24.2% chance of a pause here. So we're expecting the Fed to continue to raise rates. Now, the data coming out on Wednesday, Thursday, and Friday will really determine and solidify the next rate hike or potential pause, and that does have some implications for future Fed policy as well. So we really want to see what this data is going to be like this week. It's looking like this could be the craziest week for 2023 for quite a while. Now, you're also going to get bank earnings on Friday, and that will be very, very important as well, guys. But even tomorrow with AMC, I do think it's very well possible that you do break out above the 50 and the 100-day moving averages. You're getting some really nice volume here, as well as just overall momentum and sentiment, right? Ever since you did hit that low just 4 trading days, technically 4 trading days ago, 3 trading days ago, you were still pretty low as well. At $3.88, you're now at $5.28 per share. It's been a pretty good move higher, and typically AMC does tend to go on multi-day day runs, and we have not really seen that explosive breakout yet to the point where it would be worth shorting AMC back down if you were a short. Or if you were playing this arbitrage trade. It's looking more unlikely by the day this trade is going to work in their favor, guys. So that is going to do it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys enjoy the rest of your day, and I will see you in the next one.